So last week we had the first Fed meeting with new Chairman Warsh in place, and he came in with a more hawkish tone than many probably expected. He continued to talk about inflation being above target, how they're going to continue to focus on price stability. And one thing though, for the housing related, he did talk about housing and how things are probably more restrictive for housing than they are for the overall economy. So that's good. Previously, the Fed hadn't specifically targeted housing, so that's something to keep a watch on. This week, we're going to be looking at the PCE inflation number coming out tomorrow, as well as the revised GDP. More than likely, it's probably not going to have any significant impact in the markets. Last week, we did see a big move upward in the yield on the 2-year Treasury specifically, which was a flattening of the yield curve between the 2 and the 10-year. The 10-year did go up a little bit end of the week, beginning of the week, but we've seen a reprieve today. Basically, that's due to continued falling oil prices due to the Middle East conflict easing somewhat. But after this first meeting, the CME Fed Watch tool continues to price in not any rate cuts, but actually a rate hike of at least 25 basis points, possibly 50 basis points by the end of the year. Stay tuned.